So 2023, what to look out for? Change. It's no surprise that there are changing winds right around us, and times are going to be interesting in 2023. One of the things to consider during that is, that it's going to be difficult to raise capital, but it's also important to look at existing relationships with your investors, and that comes down to communication. So communicating with those prospective investors, but also communicating internally within your teams and also with your existing relationships as well.
The transaction market currently has a situation where buyers and sellers are far apart on their expectation of pricing. Buyers want to steal, and current owners want to use yesterday's price in terms of what they hope to achieve. That disconnect, we have to wait and see till 2023, but I suspect that some of those owners will have a come to Jesus moment in 2023. They took on loans in 2021 at short terms with high LTVs and low coupon rates. Trying to find that kind of a loan today is nearly impossible. So what will they do? Some of them may be able to find preferred equity solutions. Others may have to have very difficult conversations with their lenders and investors. That process might help us start to see some price discovery next year. Again, though, we have to wait and see till 2023.
I think the greatest challenge in 2023, as a lot of people have discussed, is the debt market. It has been the first to react, obviously led by the Fed raising the Fed funds rate, and we have seen interest rates, increase at a rate that, frankly, we haven't seen in the last 20 years. And that is going to be the most challenging aspect in 2023 because we are coming out of a time frame with which there was a lot of development, and rightly so, across a lot of different sectors, and it was a lot less expensive than it is today.
So there's some ambiguity as to where the market cap rate is due to a lack of transaction volume. What we're seeing with consensus is that cap rates have likely expanded at least 100 basis points on average. That's certainly outpaced any rent growth that we've experienced across property types, and especially any NOI growth. When you consider cost increases as well. So the result is that many projects don't pencil anymore. You don't get your required profit margin, and so what that will do, and what we've started to see, is construction will decline. That's challenging in terms of new development, but can be beneficial with regard to existing assets, and that as starts decline, new supply declines, and so long as demand doesn't decline commensurately, and absorption decline as a result, then we should continue to see relatively strong operating fundamentals, particularly in those areas that are less elastic, like rental housing.
So without a doubt, rising interest rates and the impact on cap rates generally is the primary challenge that everyone in our industry is focused on and are going to continue wrestling with over the course of 2023.
One thing that you can expect to see in 2023 is uncertainty. I mean, we're entering really uncertain times, a lot that is unknown, and I believe that going forward, we're going to still be facing the unknown and facing some difficult times, but as we move through it, I believe that we'll be able to establish some interesting strategies and learn some interesting bits about the industry.